What's going on, everybody? This is Phil from Millennial Money Gains, and welcome back to a brand new video. In this video, we got an exciting one for you. It looks like there is an opportunity in the stock market that you may want to take another look at. We're going to hop right into it, identify exactly which stock I am talking about, why I think it's a good time to buy it right now, and to potentially hold it for the long term. With that being said, let's get started. Before we hop right into this video, if you guys can, just please make sure you smash that like button. I really do appreciate it. It really does help out the channel. And because I do value your time, we are going to make a quick video. I will let out as much information as I can in this video in the shortest amount of time. So if that is something that interests you, please make sure you consider subscribing to the channel. We post anything that has to do with investing on this channel. Short-term trades, long-term trades, dividend stocks. So make sure you hit that subscribe button. But now enough jibber jabber. We're going to hop right into the stock right now. So the stock we are going to be talking about today is Visa. Ticker symbol is V. This one is currently trading around $196, and it is down about 14% in the last 6 months. So it looks like it is a good time to potentially throw some money at it. It is down about 4% within the past year. So it looks like this one is sitting at a pretty decent discount because we haven't seen a discount on this type of level in this stock for a while. So it could be a chance to get in at a cheaper valuation here. So Visa, what is it? Visa Incorporation operates as a payments technology company worldwide. The company facilitates digital payments among consumers, merchants, financial institutions, businesses, strategic partners, and government entities. It operates VisaNet, a transaction processing network that enables authorization, clearing, and settlement of payment transactions. In addition, the company offers card products, platforms, and value-added services. It provides its services under the Visa, Visa Electron, Interlink, VPay, and Plus brands. Visa Incorporation was founded in 1958 and is headquartered in San Francisco, California. Now this one does pay a dividend, so we're going to hop right here into it right here and check out what their dividend is. It is a small one, but it is one that can be accumulating over time where you can and potentially become a dividend cash cow in the future. So they pay a dividend yield of just 0.76% at these current prices, which is an annual payout of $1.50 per share. They do have a payout ratio of 21.27%. and a 5-year growth rate of almost 18%. They have been growing their dividend for the past 13 years. They do pay this dividend on a quarterly frequency. But that's enough about the dividend. Let's hop right into their financials and see what this company is all about. Visa's revenue has grown from $18 billion in 2017 to $24 billion in 2021. So they have been seeing an increase in revenue year over year. But we are going to be looking at exactly why the stock price is down and maybe look at the potential if this is a good company to invest in right now. We're going to go dive further deeper into the company and into the numbers. So Visa has a market cap of $414 billion. They have a PE ratio of 34.89 with a price to book ratio of 12.03. They have revenue of $24 billion. With a gross profit of $23.38 billion. So their revenue growth is about 10.34% year over year. They do have free cash flow of sitting at about $12 billion, so their dividend should be quite safe and with room, definitely with room to grow. They have long-term debt of just about $20 billion or so at the current moment. So these numbers aren't looking too bad. Now Visa I would categorize as more of a growth play. They have a pretty high PE ratio, which is usually not something that I invest in, but considering they are once amongst the leaders in their space and in their industry, it is something to consider that they will be trading at a premium of a price to earnings ratio. But we're going to go dive in and see if they are buying back any shares to increase shareholder value or if they are issuing more shares for dilution. Which could be potentially playing a role in the stock price. So their total shares outstanding In 2017 were 2.2 billion, and now in 2021 they got it down to 2.1 billion. So they are slowly looking like they are slowly buying back shares, which is a good sign. So let's talk about why the stock has taken a pretty decent dump recently and really went from all-time highs of around $250, $260, now sitting at $194, $190 or so at these current prices. And I think that all comes down to inflation scares, right? With more inflation, less people are borrowing money because the potential for interest rates to rise. So with increase in inflation, in order to slow that down, they will have to eventually rise and increase interest rates, which means businesses will not be able to borrow as much money for the same price that they are doing it now. So in 2020 and 2021, businesses were able to take out as many loans as possible at such a low interest rate, and now they are just unable to do that. Once interest rates increase, they will be unable to do that because the interest rate will be a lot higher, and it will be a lot harder for them to get a good ROI on their investments when the interest rates are higher. So I think that is playing a very big role in a lot of these prices of these stocks right now, as we've seen some major stocks come down, such as PayPal, Visa, a lot of growth plays like DraftKings or Palantir. We're seeing these stocks getting beaten down because they just are not able to borrow as much money as they need to in order to keep growing their company at the same rate they were growing it in the past year or past 2 years or so. So that, I think, is a reason why these stocks are coming down in price. I think these are more just short-term fears, and they are being definitely over dramatic in terms of stock price, and I think these stock prices have been beaten down. Some of them have been beaten down, and you cannot go wrong with companies such as Visa, who have great cash flow and great revenues to support the growth of their company. They are on the top of their game. So a company like Visa is one I am putting on my list. They do pay a small dividend, which I think will have the potential to compound over time. So that is another reason to get in on it if you are willing or in the market for a new company, new dividend growth play. But that's going to be about wrap up the video here. If you guys did enjoy it or took anything away from it, please just smash that like button. I really do appreciate it. Also, subscribe to the channel if you are interested in these types of videos. I post here at least 2 times per week, and I will be trying to pump out as much content as I can. Let me know down in the comments your thoughts on Visa and whether you guys hold it or are buying it at these prices or are holding off for now. I appreciate you all for watching, and I will see you in the next video. Peace!